Hey everyone, hope you're having a good day. My name's Andy. The channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in. Let's take a look, see what's going on today. If you want to follow me at Finance, join our community, finding-value.com. I dive deeper into all these sectors, looking for potential investment opportunities, sharing those opportunities with everyone. I did just release a midweek update of what I'm looking at, what I'm doing, what I'm buying, what has caught my eye in the markets, and sharing that with everybody in the community. Discount coupon code is still active. So we've got an oil price retest short-term question mark. So this is crude oil. Crude oil, in my opinion, we've got a big move to the upside coming. That is my bias at this point, looking at the charts. This is where I think we're at long term. Consolidation occurred from 1980s. We had a one hump, two hump, three hump consolidation, breakout, retest, gone. This is the big bull market of the 2000s. This is the line that was the resistance line we had to break and we did a retest on. Same exact setup. We've got a three hump consolidation. There's the three humps, the breakout, the false breakout, the opportunity of a lifetime in 2020. If you guys were paying attention, and you can buy into fear, you buy the living crap out of oil and the equities in 2020. They were incredibly cheap in whatever measurement you want to use. Ratio measurement, price to book, price to earnings, price to anything. We broke out of this consolidation. How do I know this is a consolidation? We have the three humps, breakout, breakout. We consolidated on top. We consolidated on top. This was the 9/11 scare here that really drove us down and gave us a slingshot higher. This is a consolidation sitting right on top of that. We are consolidating on top of the previous consolidation. Hopefully I said that right. If we zoom in on the right-hand side, there's that consolidation where we broke out temporarily of this upper trend line. And if you zoom in again, there's the breakout and there's the retest. You can see a wick at the bottom of that candlestick signifying that we've got some buying pressure there. So is this the beginning of a big move in crude oil? Obviously, no one knows for sure, but this is what I look at, and this is what I look for, are these retests hitting back to a trend line support level where we could potentially jump from. So crude oil looks really good, and I think there's a lot of opportunities around crude oil investments, energy service, um, and the exploration production companies. So, so we've got SILJ versus silver here. I didn't really talk about silver too much. I'll just sum up. Silver's running deficits the past 3 years, about 250 million ounces per year. We are eating through inventories. We've got about a 400 million ounce deficit that people are projecting going forward. At some point, these deficits are going to smack the paper market in the face. It needs a little bit of a smacking here and there to get the price to move on up. Now, these are the silver junior miners versus silver. So I just described the setup for silver to go higher, but the silver junior miners are incredibly cheap. And a lot of the times, it's very beneficial to buy at these little areas down here. It's a double bottom. We've got a trend line that we've been playing with. Looks like we had kind of a false breakout there. We had a real strong dollar that yanked us lower for a period of time right before 2025. This is an excellent looking chart. I know some people say, well, wait for like 8,000 breakout lines. If you're patient enough and you have done the work looking at the deficits, looking at silver and the big chart in silver, and you're looking at the asymmetry that is presented to us in this sector, I would be fine firing away here. That's me. I'm a hybrid investor. I'm not 100% technical analysis based, but I do use technical analysis and I do use fundamentals, which gives me that hybrid name. So I think this looks good. This is if we can get this to work its way on up. If we get a big move in silver, I do think we could see some crazy stuff. And I think we're in a similar situation to the 1970s. It's not like the 2000s. The 2000s was in a declining interest rate environment. This environment has broken that downtrend, and we're in an increasing interest rate environment, which is very similar to the 1970s, which also had an increasing interest rate environment. So this here is signaling that you can get silver junior miners um, in relationship to silver itself, one of the cheapest times probably in history. Here's some ratios. This is OIH. OIH is an energy service ETF, and it's versus XOP, XLE, and PSCE. XOP is an exploration production company like the mid caps. XLE is the large caps, kind of the bigger companies. Think of it as like Chevron and those types. And PSCE is the small caps in both exploration production and also oil and energy service. So OIH versus XOP, this looks very good for OIH, a squeezing of the wedge. Yes, we did get in this corner here for a lot of the energy service companies, and it's broken out, ready to work its way on up, I think. And we're coming from just ridiculously low levels for energy service, which is a good thing. So we could see some of the energy service companies beat some of these oil and gas exploration companies. If you look at the valuations in some of the small cap energy service companies, they are quite enticing. Quite enticing. OIH versus XLE. So what this is saying is OIH is very sensitive. It went up very well during the 2000s in a declining interest rate environment. We got absolutely crushed, energy service did, all the way back down to this very low area. We've broken the downtrend and we're still incredibly low for energy service versus the big boys. Generally, what occurs in these off market conditions between 2009 and 2020, XLE falls less than OIH. OIH falls more than XLE. This is where you get the underperformance. And now we're starting to base against the big boys. And I think we're going to see an outperformance of OIH. And if we do hit problems with production, where production starts to roll over in shale oil or wherever else in the world, and if people do panic, which I do think will occur, what you'll see is you'll see a drilling boom, and you will not get much more oil out of the world if it's geology driven. That's exactly what occurred in the 1970s. If you look at the 1970s, the energy service companies absolutely whooped the oil and gas sector, oil and gas exploration companies sector. So I think that's going to occur again. I think we're going to see OIH outperform oil and gas, the big boys. And then the ones that have the ability to increase production, some of the small caps, I think we're going to see those do incredibly well for exploration production. And this is OIH versus PSCE. OIH working its way on up, PSCE outperforming here OIH. So it's pretty much balanced. It's not, we're right in the middle in terms of fair value for OIH versus PSCE. And PSCE is a combination of energy service and small cap oil and gas. But I do think these will probably be pretty similar and probably stay within a range as they both go up together. All right, CVX, COP, and ZOM charts in the long term. So I like looking at long-term charts like this. What does it tell us? It tells us where we're at in the cycle. So where's oil at in its cycle? Well, we had a consolidation here back in the 1980s. So 1980, 80s, 80s through here. We broke out in 1986, perhaps. Breakout, retest, that was probably the Black Monday or something. And then just a total outperformance going all the way up to 2008. So that started in the 80s, at least for the big boys, all the way up to 2008. 2008, we started a big consolidation. We've broken out of that consolidation and we're consolidating on top of that consolidation. So I do think we're going to break higher and have another big leg up for CVX. ExxonMobil. ExxonMobil working its way on up. We hit resistance through here. We had a consolidation. And we are on top of that consolidation, consolidating on top of that, just like CVX is. And then COP, which is another large, fully integrated oil and gas company. Here's your consolidation here. We broke out, rolled on over. This was in 1992. We have a very similar situation to 1992, at least for COP. We've got the same consolidation. We've got the breakout, and where I think that circle is the same location as the circle here in about 1992. This is wave one, wave three, and then wave five, and then the consolidation on top here. So these look exactly the same in terms of where we're located, and I think we've got a big move ahead of us in oil. And these aren't the companies that I would play them with. I would play them with different companies. But these are there to show us kind of the big long-term cycle. XOP versus crude oil and XLE versus crude oil. So this is what it looks like for the ratio of XOP versus crude oil. We had a big downtrend that we've broken back in 2022. We consolidated sideways, and it looks like we're trying to break out here. We had a big selling pressure move in November, December, that kind of at the end of the year last year, and we're starting to work our way back up. But we'll see if we can break back above this pattern again. And XLE is in a similar situation. We break out of these. This broke out in 2005. Another one that we broke out in 2022. We're trying to break higher here. We had some selling pressure, and we're back above this resistance line, which is now support for those ratios. Peter Schiff says, it's funny watching A. Pompolino on CNBC trying to explain what a meme coin is. The reason it's hard for him to do that is there's no real difference between Trump and Bitcoin. So it's a fine line to walk when explaining a meme coin without exposing the same fraud about Bitcoin. That's completely true because when I listen to people talk about Bitcoin, they're like, no, Bitcoin's the only one that you want to invest in. I'm like, well, why? Tell me what the difference is between a meme coin or any of these other coins and Bitcoin. And there is no difference. And I don't know why they're so easy to dismiss everything but Bitcoin. And it's the same damn setup. It's the same thing. And I just lump them all together. I'm like, it's all crypto. It's all garbage. To me, it is. So I don't know. Other people can have different opinions there. So we've got drill baby drill. This is Trump's plan. Trump's plan, drill baby drill. But look what we got here, guys. Zuckerberg, he's got another drill baby drill plan that he's got going on here. I thought this was funny. I was just scrolling through stuff and it's just funny. Silver chartist. So I'm convinced, based on in-depth research and historical cycles, that we'll see $300 silver, $100 uranium, $15,000 gold, and $20,000 platinum this cycle, 2026, in his opinion. He said, that said, gut-wrenching pullbacks equal the price of admission to participate. There will be times I'm short-term bearish along the way. I think that we are going to go higher than some of those. I think he's probably right on gold. I think gold is going to go to about 15K, maybe slightly under that. I think he's way too low on uranium at $100. Now, by 2026, that might be the right call. But I'm talking by the peak of the bull market, I think we're going higher than that on uranium. Silver, I'm not exactly sure where the peak is going to be. I think that we're going to hit perhaps $60, $70. We'll break out of that big cup and handle, but then we'll probably retest the top of that cup and handle pattern. So I think we'll first break through that. By 2026, it could be like 50, 60, $70, something like that. We'll pull back to the top of 50, 40 something bucks. And then we will run again to some ridiculous level. And that's where I think uranium will be high, silver will be really high, gold will be 15K at that point. And then platinum will be, I don't know where the top of platinum will be. I really don't know. Silver and platinum are two, I think, metals that can go up ridiculous amounts. And I'll give you the reason why. Silver is used in everything. We are running pretty big deficits in silver. Silver production plateaued in 2016 and it's been in decline. And since it's used in everything, we could see a really big squeeze in silver. I mean, a big one. And I think $300 silver could be too low. Could be. It all depends. And I don't know where the price will start to price out a bunch of demand. It's tough to say. I don't know that. Breaking the $50 mark on silver is also a big triple top breakout. So I think it could run a huge amount to the upside. Um, and it could go even 4-digit price. Again, that's not what I'm claiming it will do, but it's a possibility. And then platinum is the cheapest of all of them. It's underneath its cost curve still. So when that thing breaks out, we don't have a lot of future production to replace platinum with. It's mainly palladium, and I know that there is some substitution that can happen. But platinum, it's getting harder and harder to actually mine because it's just not in the ground. It's mainly rhodium and palladium that we can get at. And I'm not saying rhodium is by any means um, in there in any sort of quantity. I'm just saying the percentages when we're pulling them out in the future are mainly palladium. Platinum is dropping off like a rock. So could we get $20,000 platinum? So I'll just say this: in Germany, when they had the hyperinflation, platinum was 5.5 times the price of gold. 5.5 times. Now, are we going to get to 5.5 times of like 10 grand or 15,000? I don't know. All I know is that we're cheap and it's got gigantic asymmetry, and we'll see what actually comes out. Putting on price targets, I don't think it really matters. The only thing that we use when we put these price targets on is, how much asymmetry is there, and where should I allocate money, and how much allocation should I put? Physical silver, physical platinum, physical gold, they're all the least risk things in this world. And if we go short in some of these materials, there is gigantic demand in the future for them. If you look at platinum and the deficit in platinum, if you look at silver and the deficits in silver, you know, I'm not stating that this will happen, but one could come to the conclusion that silver should be priced as much or more than gold. And that sounds absolutely ridiculous. But I'll just ask you this question then. My question is, if everybody needs silver to run industry and we get really short in it and people start to panic, what is the above ground inventory of silver and what is the above ground inventory of gold? And what is silver? What's the substitute for it? And that's where you're going to get your potential price point. So I would say that gold and silver above ground is pretty similar. I would say maybe silver's got a little bit more above ground inventory than gold. But gold, we don't use it for anything. And silver, if people panic in industry, it'd be interesting to see what kind of price we do get. And I'm sure people will sell their silver too, and it's not going to be a straight line move. There's going to be a lot of resistance to that move higher if people start selling silver in mass. Trump says he'll fill the U.S. strategic oil reserve right to the top, says Bloomberg. And my question is this: if we get a really tight oil market, how's he going to do that? Where's he going to get it from? So if we get low inventory, commercial inventory levels, which we have, and he needs to fill this thing up with hundreds of millions of barrels, how? What price? How's he going to do this? Um, Now there is a way that you could do it. You could crash the economy, just crash us like heck, and then fill it up with when it's cheap, kill demand, so to speak. That would also drive demand into the bond market, which they probably want. The only negative thing is if you kill the market, you crash it, you end up running a gigantic deficit where your tax revenues go down from investing. I don't know how they're going to balance this. It's a tough situation they're in. The transcript. So Drunken Miller, he says, here, I'll read this longer one here. He says, I've been doing this for going from the most anti-business administration to the opposite. We do a lot of talking to CEOs and companies on the ground, and all CEOs are somewhere between relieved and giddy. So we're a believer in animal spirits. And so he might think that we could see some upside here based off of the new administration and their pro-business stance. Energy is coming. Here's the seasonality there. January, yeah, we get a big kind of consolidation. February's up, pullback in March, and then we rip it from late March all the way till about June. So that seasonality is coming. And from early January all the way up, that's a pretty big move. Christine Guerrero says, watch some of the drilling companies tomorrow to see how serious Wall Street thinks drill baby drill is. So Trump said he'd declare an energy emergency, increase drilling, and end support for electric cars. His pivot to oil and gas follows the hottest year in record history. I'm not a believer, guys. I don't think drill baby drill is going to do anything. I think the companies are going to do whatever they're going to make money doing. So I think that's what they're going to do. JC says over 50% of the U.S. silver's imports come from Mexico and Canada, and they are at risk of facing imminent tariffs. I don't think we're in a tariff Canada, guys. Or Mexico. That's where we get a lot of our important strategic materials. Oil is going to be a strategic material, same with silver. And if we import silver from Mexico and Canada, why would we put tariffs on basically the feedstock of everything of these things that go into everything? You're just going to raise the cost of everything, and those tariffs are going to be paid by Americans. Unless he eliminates the federal income tax, he's just adding more taxes, and whatever you tax more of, you get less of. I don't know. Looks like nat gas saving the day in Texas right now. The ERCOT current generation, natural gas, is almost 50% of electricity generation. Look at that. Go nat gas. Warren Buffett says the biggest thing about making money is time. You don't have to be particularly smart. You just have to be patient. Patient, patient, patient. I read that a lot amongst the best investors. You take undervalued investments and then you sit and do nothing for a long time. Warren Buffett would say, you don't ever sell it if it's a really good company. Eric Nettle says, why do you think that if the U.S. does not exclude Canadian oil from tariffs, assuming tariffs actually get implemented, that they will be in place for only a short time? U.S. energy independence is a fantasy. Even the U.S. government is forecasting the twilight of U.S. shale, with dramatically lower growth rates going forward. Canadian oil is non-substitutable at scale and is safe, clean, reliable, and cheap source of oil for U.S. refineries. While tariffs are inflationary on the most visible cost of living to the U.S. consumer, uncertainty creates opportunity. This is annual U.S. crude oil production by region, and you can see in the United States, we're basically forecasting a flat move in 24, 25, and 26. Annual production change, there we are going forward, 22, 23, 24, and then slight increases perhaps in 25 and 26 by their own forecast. Peter Schiff says, Trump promised to defeat inflation by rapidly bringing down costs and prices, mainly by drilling more oil, but inflation isn't caused by oil prices, which have actually been relatively low. It's caused by deficit spending and QE. Unfortunately, Trump will deliver more of the same, in his opinion, for Peter Schiff. And this is US dollar hard assets. So today's sharp decline in the dollar serves as a stark reminder of how unprepared investors may be if this marks the start of a prolonged trend of a weaker dollar, and that's gonna push hard assets up, precious metals, commodities, and you might even see emerging markets do very well if we get a dollar to turn lower, I should say. And that's all I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. Discount is that coupon code. And that's all I've got. So we do have a midweek update that's released on the website if you guys want to check that out, just as a reminder. All right, guys, we'll catch you later. This is Finding Value.